Good afternoon. This is Tom Alexander. It is Sunday, July 28th. It is about 1 p.m. Eastern time in beautiful Charleston, South Carolina. This is the stock market update that I do every week. You can find these archived on the website. Here, I will show you that. By the way, if you find value in these, it would be a huge help to me and would be much appreciated if you would like and subscribe to the channel. If you make comments, I will respond. That's also very helpful in generating activity for the algorithm to grow the channel. So all of that would be much appreciated. All right, let me show you where you can go to find previous archived reports. Now, these are free. Go to alexandertrading.com, weekly update, click on weekly update, and it will bring you to a catalog that goes back, I don't know, a year plus or many months plus. Then you can click on this is this week's, and what you will see here is all the information that I'm going to go through in the video. But you have the charts here, so if you want to refer back to these during the week, you can. You can also, obviously, you can go back and you can see what I said in previous weeks. It can be very helpful when you have an archive of material from someone to go back and see if they are consistent and if they are generally right, or if the methodology fits you. So I hope you will avail yourself of this resource. Again, it's free. Okay, let's talk about one other thing. I want to start with this real quickly. Getting a lot of comments and questions about the presidential election and whether or not we're going to have Armageddon if Trump is elected, or Armageddon if Harris or whoever the Democrats decide to run is elected. And it doesn't matter. It hasn't mattered yet. I don't see why it would matter when it's all said and done. Trust me, all the politicians want the stock market to go up because they're all trading it. So I'll just leave that there. So let's take a look at the charts this week, and we'll start with the stock indices. And I want to start with the S&P. Now we have, we've had in the case of the NDX, the biggest drop we've seen in quite a while. It's down about not quite 10%, a little over 9%. But the other indices, the decline has been relatively mild and very typical for a bull trend. The question is, are we in a bull trend or a bear trend? And I personally think we're in a bull trend. And the reason I think we're in a bull trend is because you just do not see the disparate activity in markets that we're seeing now. So for that reason, with the Russell almost at another multi-year high, and the other indices, the Dow, the New York Composite, as I'll show that in a minute, have almost retraced much of last week's decline. But if we are in a bull market, or if we were in a bear market, you would have everything declining roughly in lockstep, just as with a bull market, you have everything advancing basically in lockstep. Now you can say, well, we don't have that. Well, we don't. Well, we had it briefly a couple of weeks ago when we had an expansion in breadth. We had the Russell begin to show life. So, and you can certainly make a reasonable case that we were overdue for some sort of retracement in the panically bid 7 stocks that have been driving this market for the past year and a half. So maybe there's a big rotation here, but in general, at this point in time, I think we're in a bull market. And I think last week's low could be an important low, and we'll take a look at that. Now, the SPX bottomed on Thursday right into a key reference area that had been highlighted earlier. No big secret. It's this gap, and we bottomed right in it, and we're down not quite 5% from print high to print low in the SPX. If we look at the NDX, it's off not quite, about 9.5%, not quite 10%. But again, this the drivers of the NDX and the SPX to a lesser degree, but especially the NDX, been the 6 or 7 stocks that have been hit pretty hard with profit taking and some selling and reallocation and all of those things. Okay, then if we go back and we look at, let's look at the Dow, which is 30 stocks, but some of the industrials are acting very, very well. And we've seen a deep retracement into the decline that began on the 18th in the Dow. Then we've moved over to the New York Composite. We've had a very deep retracement as well. This is the largest of the indices that we follow. It's every stock listed on the NYSE. And then if we look at the Russell, we can see we retrace almost, well, we've retraced 90% of the decline, but we almost closed at a new multi-year high, didn't quite make it. Now, next week, we have a Fed meeting and press conference on Wednesday, followed by jobs numbers on Thursday and Friday. So Monday and Tuesday could be this grinding trade, waiting for all the excuse to move that will begin Wednesday afternoon at 2 with the announcement, followed by, more importantly, Powell's press conference that begins at 2:30. Then we have a jobs number at 8:30 on Thursday and a jobs number at 8:30 on Friday. So that all of that could be catalyst for market movement here. But you can see even in this decline, the Russell was down about 4.5%, but it almost immediately began to bungee jump back towards its high, and it closed on its high for the week. So that's a net positive for the market. Let's take a look at this. Now, this is VIX, the CBOE volatility index, and VIX tends to spike in times of uncertainty, in times of market decline. When ranges increase, you'll see a spike in VIX. Well, we had a spike in VIX last Thursday. And if you look, going back into 2020, we've had successively lower spikes, and in particular since March of 2022. I'll expand this out. You can see we've had these spikes in VIX, and each spike is lower, but each spike has also marked a swing low, most of which have been very significant swing lows. So the question as we head into next week, is this another swing low leading to new all-time highs? Could be. I mean, I would give it the benefit of the doubt based on everything else that we've seen. We're still in the bigger picture making higher highs and higher lows in the indices. We have, the market, in spite of all the incredible exogenous noise that has gone over, particularly in the political spectrum, over the past 10 days or so, the market has absorbed that extraordinarily well. So it may be that, we go sideways here into mid-Wednesday, and then the market starts to move again. I would give the benefit of the doubt to the upside. I'm overall bullish on the market. My opinion would change if everything turns around now and takes out last week's lows, including the Russell and the New York Composite. We may have a lower low in the NDX and the SPX at some point next week to close that gap, in particular in the SPX, but that remains to be seen. Okay, guys, again, I would very much appreciate it if you would like and subscribe to the channel. If you have comments, please make comments. I'm happy to respond. Have a great rest of your weekend, and I will speak with you again soon.